Hey everybody, so I'm getting ready to do my latest round of monthly stock buying, and most for the most part I'm going to be adding to my existing positions, things that I talk about all the time on these videos. But there's one new position I'm planning to open up in June, and that is a fintech stock called Marqeta. Ticker symbol is MQ. And if you're not familiar, they are kind of a financial infrastructure platform. They develop the technology that allows companies to offer their own customized credit card products, credit and debit card products. And there's a lot more to that than it sounds like. Their biggest customer by far is Square, or Block as they're known now. They're the company behind the Cash Card that's linked to the Cash App. They're also partnered with DoorDash and a few other delivery platforms. For example, when you order an Instacart grocery order, the Instacart shopper doesn't have your physical credit card, and Marqeta's technology makes it possible for them to pay with your credit card at a grocery store on your behalf. They partner with companies like Klarna. They're partnered with JP Morgan Chase to produce virtual credit cards to use online. There are a bunch of different applications for Marqeta's technology. It's a technology that most financial companies need to one degree or another. And as technology and finance evolve and there's a need to issue more customized financial products, the market opportunity here will just get bigger. And I'll talk about the overall market opportunity in just a minute. So, like most of these financial technology companies, Marqeta gets a percentage of the transactions that are processed, a small percentage of the transactions that are processed on its network. In the first quarter of this year, about $50 billion of transaction volume went through Marqeta's technology. And the company made $217 million of revenue on that. So, not a big percentage, but a substantial amount of money when you're talking about tens of $50 billion at a time. So, the company's has a pretty low cost of revenue. It's got a 41% gross margin. It's not profitable yet just because it's reinvesting so much in its own growth. Its payment volume grew 37% year over year in the first quarter, despite the really difficult environment we're in right now. Its revenue grew 31%. So it's growing very, very fast. It has a nice balance sheet, so it's not going to be hurting for money anytime soon. It's not losing a ton. Its adjusted loss in the first quarter was about $4 million, which, when you're talking about 217 million in revenue, that's really not that bad when you consider those growth numbers. And to make it even better, Marqeta is really emphasizing efficiency going forward. It's completing a restructuring in the second quarter that it expects to have about 40 to $45 million of annualized cost savings from when everything is implemented. That alone would wipe out that adjusted loss I just mentioned. Its adjusted EBITDA margin has gone from -6% a year ago to -2% now, so it's moving in the right direction. Companies don't need to be profitable right away as long as they are growing and doing everything else right, which Marqeta is. It management apparently thinks the stock is cheap. They authorized about $200 million of share repurchases. This is just a $2.5 billion market cap stock. The company was valued before it went public. It had last raised money at a valuation of above $4 billion, and it's still moving in the right direction despite the kind of pressure on growth stocks right now. It's down 23% year to date, and this is a massive long term opportunity. I continue to remain very, very bullish on the cashless economy. Um, so, Marqeta, I mentioned $50 billion of payment volume in the first quarter, so that's $200 billion annualized. There is about $45 trillion of global card payment volume going on right now annually, and that's expected to almost double by 2030 to $80 trillion of global card payment. So Marquette is not going to get all that, obviously, but its technology could be applied to many, many other different customizable card products, and it can certainly multiply in size several times over from here. And if it continues to really show a path to profitability take shape over the next year or two, I think this could be a very big winner. So this is one that I love their management team. I love the moves they're making, and I'm planning to open a small position in my portfolio in the very near future. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.